What is up, YouTube? We're recording in the dark now. Hi, how are you doing? We had a successful trade last night, and I neglected to, before starting recording and actually getting onto the chart, we neglected to find out how to partially enter and partially exit the market, right? Because let's say you don't have exactly $20,000 or whatever it is to buy the one share you need. I'd like to be able to still enter the market with the small amount of money I do have. So even when I am at my level, I can still invest and make some capital off of my investment. From there, that's what I'm going to do. I'm going to speed run. I'm going to do my best to speed run what I can of the market. Let's go ahead and mark out session opens. Let's go ahead and pull up our notepad just because I need to open my browser. This one, this one, this. Good. We have. Let's go ahead and do that. Boom. So we have Asian session at 20, London session at 4, New York session at 8. Pre-market for Asian session is 8:30. So that's what we'll do first. We'll go ahead and mark out, not on the 1 minute, but the 30 minute. We'll go ahead and mark out. Boom, 8:30 there. That is our market. We'll mark out 9:50 as well. We gotta go down to the 5 minute because we can't see it any other way. 9:50 is our go ahead. Good. Gold. This. Asian session is 4. Or no, I'm sorry, it's 20. Huh? Hot dog. 20. 4 is London session. So London session 4. Boom. And then we'll go ahead and mark out Asian session. I gotta remember this is on the 5 minutes, so it's gonna be spread out like crazy. That looks a little bit more accurate right here. This being London session, that's way more accurate. I'm gonna throw on 20 now. I need to do this, not that. Neat. 20. Boom. Asian session, London, New York. Yeah, New York pre-market, and then 9:50 right here. This, I know that says 9:30 down low. Ignore that. It's 9:50 on the 5 minute. We're gonna go ahead and mark out session highs and lows. Get our key levels together. This is Asian session high. Boom. This is Asian session low right here. Boom. We'll mark out London session high. I think this right here is about as high as it goes. Good. And we are at London session low here. Boom. Do we care about Asian session? No. Why? Because we've already crossed it. And do we care about this high? Yes. Why? Because that could be a draw on liquidity. As you can see, we apparently entered and exited here, right? That was a mistake on our part. We have NASDAQ stuff set up. Boom. Let's go ahead and mark out stuff on the S&P. Before we forget, this is the 5 minute. Let's go up to the 30 minute just to speed things up. Boom. We'll start with Asian session at 20. Boom. We're going to go to 4 for London. Boom. What did I do? I did 8:30. Yeah, 8:30. Boom. 30 minute. This. 8:30. Boom. And then gotta go down to the 5 minute and do 9:50 right there. Boom. This is going to be our that good. All right, now we'll mark out session highs and lows. Let's go back up to the 30, get it out the way. Boom, boom. Good. This Asian session high. Boom. Low. Actually, we add a cross here. Actually, how do you identify a low? Down, up first. So this right here would be our low. Boom. Or we might be about to cross that out either way. Not Asian session. London session high. Right here. Boom. How do I identify a low? Down, up. Right now, this is the lowest point. If we wanted to, we could mark this low right here, I think. I think that's an accurate statement. We can mark that because it is the lowest point price got. Do we care about Asian session low? No. Why? Because we crossed it. How many times? 1, 2. Technically, this wasn't the low. This was. With that being the case, we have our marks taken care of. Looks like we just hit a inverse fair value gap, which means I believe price is going to continue to go down. So we're looking to take a short position based on that inverse fair value gap per the London session. It's not an inverse fair value gap yet because it has yet to close above that fair value gap. Let's go ahead and queue up our handy dandy resource tool off to the side here. We're going to go ahead and mark draws on liquidity, down, up, boom. We can use that one there. Down, up, boom. We can pick that one there, boom. Down, up. You pick this one here, boom. Down, up. We can pick this one all the way down here. That is the thought process. I don't believe that's roughly the same one, so we'll just go ahead and do that right there. Keep that nice and simple. So we're looking to take a short position on this, this right here, this inverse fair value gap. Inverse fair value gap is any gap that's closed above by a green candle. That automatically makes it a inverse fair value gap. We are currently on a retrace for the 30-minute. Let's see if the NASDAQ is doing the exact same thing. Yes, it is. We do not have an inverse fair value gap, so we're looking at a little bit of an SMT divergence per that confluence. We're going to go ahead and run over here. Looks like, yeah, we have an SMT divergence right here between these two candles. The NASDAQ says we are going to continue going down alongside the confirmed inverse fair value gap, right? We have the same inverse fair value gap, except the S&P says, no, we're not going as far down. S&P is lagging behind the NASDAQ. We're going to go ahead and take our trade on the S&P for the day. Again, we're not going to wait. We are going to wait because that's our strategy, is to, guess what, wait for a price to hit key levels. Boom. What's our key level? Let's go ahead and actually find that right quick. That would be our most recent low right here. Why did I mark this? This right here is nil. We don't bother with that. Our liquidity is like right here. This is what we were drawing off of. Boom. We can actually draw off of this one right here as well. And right there, let's go ahead and pick this one right here too. Down, up, boom. Boom. Yay. So we have our four. Yeah, we have our 4 hits. The first one being our key level here. When it hits that, we'll wait for it to come back within equilibrium, place a sell trade, and hopefully watch it plummet. That is the current strategy. That is current gist for that. Yeah, let's go ahead and get Opera GX going on this PC right quick. I'm going to look up how to partially enter and exit a position on trading view. Gold. Partially enter and exit position on trading view. Good. So I know how to enter, right? To enter, it says, hey, I'm going to buy or sell whatever it is where this is right now. Our goal is fairly simple. We want to take the amount we enter completely off. So the resulting gist is we will have our what's it called? Oh, what is it called? So we protect our position by, one, having the amount we invested back in our pockets, while the rest of what we have is still in the market, making us money, potentially. And we'll go until we think is satisfied after we hit our key levels, and then we'll exit out of the market completely after our final key levels hit. We made a mistake. We made several mistakes last trade. The first trade we took, we did not hit key level. I assumed it hit key level. We did not have an SMC divergence. It was all on the chart that and in the video. We witnessed price do something like this right here, where the low just barely got close to this and it rebounded off of it, and we actually got a, per this chart, a large spike. We missed out on a lot of money because I chose not to wait. We missed out on a lot. I believe we took the trade on the NASDAQ. We did right here on that candle. We missed out big time. Comment section. That is unfortunate. That's a price range of 19,935 all the way up to 20,054. That's about $100. $150, something like that. And I believe, no, it was within this hour that we took it, because it was between 9:50 and 10:30. So we got our position off of that quite well. However, we made a mistake in noting that let's go ahead and do that. Let's go ahead and do this. We made a mistake entering the market because we didn't know how to exit the market. Had a minor panic attack in the middle of that. As a result, we not only lost out on some money, but we also lost out on a fairly good trade. We'll stop at that one there. We have our key levels here we can hit. Our profit margin to hit right there. We have our key level marked out. Price needs to hit this key level in order for us to have a valid trade idea. We do have, and we do not have an inverse fair value gap on this, but we do on this here. Inverse fair value gap says yes, we're going to go down. No inverse fair value gap here. Lacking of, there's still a lack of orders, though it filled it. All right. I think, yeah, we're going to continue with S&P 500 because we know price is going to go down based off of this. From the hour, we're just waiting for it to hit key level, and I'm not going to say it has yet. I don't think it has. We had a fair value gap. It did hit, but we are not within our 9:50 to 10:30 a.m. margin that we need to be. And so we are going to wait patiently. We have another, technically, 2.5 hours before we have to take another trade. Before we have the opportunity to trade. There we go. And we're like, what? 1 to hour and a half before pre-market open, when we're supposed to be it hitting our key levels and actually marking out stuff right down to the 1 minute and then taking our trade off of it. So yeah, that's currently what's going on. We do have a price range from here to here. Technically from here to here. Either price hits this key level and continues barreling down, or it hits this key level and we keep going up. We're hoping it comes back up, hits this key level within this area, so that way we have our key level hit on the, of course, pre-market hour. And then once it hits that key level, we go ahead and map out our stuff into 950, at which point we'll go ahead and narrow it completely down to the point where we are okay with taking a short position. We're going to wait for that price to barrel on through. We'll have our stop loss just above this high and our take profits 1, 2, 3, and 4. Relatively fine. Good and gold. And yeah, that is what we'll do. Go ahead and research this, get it nice and gold, because a whole lot of this. So what we're going to do is we're going to do this right here. Okay, so my understanding is delve into this just a little bit. Instant order placement is disabled in trading settings. Click the X to close a position, then enter the desired quantity to close in the confirmation pop-up. Initiate closing. Okay, cool. Partial close confirmation. A confirmation pop-up will appear. Check partial close in the confirmation pop-up. Enter the number of units/shares you want to close. Confirm and close. Click the green close button to execute the partial close. So, to close the position, I would be buying it back at a lower price. Or not buying it back at a lower price. It'd be because we're going for a short position, right? Our goal is to see yeah. So for a short position, we're looking for a liquidity sweep on the upside. We're looking for this key level up here to get hit. Duh. That's the whole point behind a reversal. We see that key level get hit on the 1 hour. We're on the 30 minute, so it'll hit that. Or, yeah, same thing. We'll see that get hit, and then from there, it should continue on down. For the partial close, though, when we enter our position, what I'll need to do is I'll go in, right? And I will have to designate the specific amount of shares / other that I would need in order for that to be a thing, right? At that point, I can go ahead and watch as our take profits get hit moreover and moreover. With that being said, yeah, we can just go with that. Makes sense. We have an alarm set for pre-market open. We have done pretty much what we wanted to for right now. We know we're in for a short position, and we now know how to enter the market and partially close on the market. With that being the case, and with all that information down packed, said we are where we want to be at the moment, I want to be right back. We will be right back at just before pre-market open because this chart is delayed 10 minutes. So we'll wait for pre-market to open up. If our key level, either one of these key levels are hit before or at pre-market open, we'll take that as a confluence, and from there we'll move on with our strategy per the ABC chart. Plain and simple. I'm actually going to go ahead and notate this. So, I don't know if you can see that or not, but I am now blind. Wow. Let's go ahead and, 24, and that says 8. So, 20. Do this. And your equals. Good. We'll go ahead and keep that up. Also, before I forget, because we just now did this, allow me to look for news. We have for the USD FOMC, member Williams speak. FOMC is one of the ones that we need to be avoiding. However, and I do mean this, however, it is not a red folder. It is a normal folder. It is a yellow folder. Typically, it's red folders that we avoid. On yellow folders, price could do something in our favor. As a result, we're going to wait. Patiently, we are going to wait. We got a couple red folders for the Canadian currency and one other yellow folder for the London Euro. So, yeah. We are currently golden to trade at the moment. According to news, I think we're good. We have an S&T divergence happening. It has happened right there, and I believe yeah, we had our S&T divergence happen here. Just I'm gonna note it just because we had this here. Boom, it was a small one. Nonetheless, though, it was an S&T divergence, so we had from here to there. Boom. Just to mark that, notate it. What is an S&T divergence again? It is a confirmation that price is going to, of that key level hit, that it's going to keep going down. Yeah. Yeah, and we are still well within structure. We just got our new high. We're looking for a new low now. From that new low, it should not come in with this key level. If it does, we'll see a mini retrace into equilibrium. Once it hits equilibrium, we'll go ahead and bring it on down. Then again, this is 30 minutes, so we're primarily looking for, again, a short. So it needs to hit the top key level for us to have a valid best opportunity to get that short in. We are an hour out from market open, pre-market open, so we are going to wait patiently. Yeah, we'll be right back. Okay, it is now 8 a.m. for those of you on my East Coast. Good morning, and for those of you on the Pacific Coast, good night. Nothing much has changed. We are an hour out from market open. I'm looking for, we have an S&T divergence. We do, in fact, on the NASDAQ, we do not have a, what's it called? Inverse fair value gap. We have an inverse fair value gap on the S&P 500. Looking for, this may have been a liquidity sweep on the downside. I'm taking note of this now. This may have been a liquidity sweep, which means price is going to move higher. We're waiting for it to hit this key level specifically. This would have been our breaker block, order block, liquidity sweep. We also have the inverse fair value gap on the S&P. As a result, it swept that low. Same gist. So price is going to continue moving higher. We have every confluence needed to on the 30-minute showing us that yes, price is in fact going to move higher. Once it does and hits our key level, from there we will scale down. We don't want to take a trade before 950. With that being said, I do want to see what price is going to do after it's hit our high. Once it hits our key level, it'll either be a sweep or it'll be a complete break of structure to the upside. Can only be one of the two, realistically speaking. So, yeah. As far as I'm concerned right now, we are still in it for the short position. So when we enter, we're not buying, we're selling. We're selling high, buying back low. Once that is a thing, we also now know how to somewhat partial close. We know to enter one unit instead of all of what we have, right? Yeah. I'd like to see us take profit on multiple levels today. Yeah. In the event I'm wrong, no harm, no foul right now. I understand that's part of the game. I gotta know exactly when to cut my losses short and all that fun jazz. Uh, if I do wind up taking a short position, I think I'm gonna put it above here, just above our inverse fair value gap, because this will have closed and this will have guaranteed. Because on the 1 hour, I'm pretty sure this right here, from this right here down to here, this is one fair value gap. Let's just look at that right quick and make sure. Very small fair value gap, but I did in fact call that. This is in fact a fair value gap on the 1 hour. Higher time frame holds higher confluence, holds higher power. We have a very small fair value gap there as well. On the 30-minute, we closed above that on one, but it didn't on the other. We still have that SMT divergence on the hourly. You can see that here. Because on the higher time frame, we still have that fair value gap, and we actually swept that fair value gap without disrespecting it. I do strongly believe that price is going to continue moving down. You know what I'm seeing right now? I'm seeing a lack of... We are in a downtrend right now on the hourly. I'm seeing a lack of buying power in the market. I'm going to ignore what I just said. Stick to what the strategy has. I'm just going to stick to it. Because that is what has been more successful, and as a result, I'm going to adhere to it sooner than I will myself at the moment. What do I think going into this trade? I think that my current use of confluences is what's going to save me. That the fair value gap on the higher time frame is to be respected. As such, it is not an inverse fair value gap until it is closed above by a new high. And if it's closed above a new high, it'll be a complete break of structure. We'll have made a new high on the hourly. I don't see that happening as a result of this being the way it is. However, anything can happen in this short span of time here. I am entirely inclined to take a trade on the S&P 500 solely because it is lagging behind the NASDAQ as of right now. With that being said, let's scale back down to the 30-minute. And what we're going to wait on is market open here, pre-market open specifically. We're going to look and wait for one of our key levels to get hit. And this time it should hit compared to last time. It should. Based on these confluences already laid out before us, it should very well hit one of the key levels. We might hit the key level within this candlestick, within this candle's 30 minutes, potentially. Either that, or it will, again, this is a key level, so it'll probably sweep this liquidity completely and push higher. Yeah. I'm going to play one more mission on my video game right quick. I'll pause recording, and once I'm done, I'll unpause, and we will see where we are at. BRB. Alright, comment section. We are just before market open. Not 30 minutes, but 26 minutes before pre-market open. With that being said, yeah. this is where we are. We haven't closed above or below. We have not crossed one of our key points here. I do want to mention that we have not also, we haven't messed with our high and low. I don't think there's an SMT divergence on this just yet. There is not. All right. I think it looks good for right now. So far, it's starting to look like price is going our way. Say that. I don't want to jinx it. When price hits key level, we're going to scale down to our 5-minute, look for a break of structure, inverse fair value gap, or a SMT divergence. We might actually get, we already have an SMT divergence over here, but that's for price moving up, not down. From this, I can pretty much, we're looking for a break of structure because right now on the 5-minute, we are technically in an uptrend per this, right? When we hit this, we'll be in an uptrend. We're waiting for that break of structure back down. So we're looking for a lower high off of the 5-minute time frame. Once we have a break of structure, or because this will have created a fair value gap, we're waiting for that inverse fair value gap, so a large wick down, indicating that it is in fact going to continue down. We're going to go ahead and scale for our 5-minute continuation. So we're looking for either a fair value gap, a breaker block, order block, or an equilibrium in the event we can't find any of these three. At that point in time, we'll be looking for the 1-minute confirmation for another break of structure or an inverse fair value gap. Plain and simple. Plain in simple. Boom. We have how long? 24 minutes. That is what we've got right now. 24 minutes. I think I can step away again and we will be right back immediately after. BRB. Okay, comment section. Looking at what we've got here, allow me to go back up to the hour here. Boom. Let me go back up to the hour here. Boom. We have not hit our key level. At least not yet. Interesting stuff, to say the least. Very interesting stuff right here. We are not within our time to trade yet. However, at the same time, this is almost exactly what happened last trade. If you guys saw that video, it should have been posted like Thursday night because the power went out like 4 times. Same thing again. We mark our session high. Here's our key point. Here's our key point. We're looking for this to touch this line and move back down, right? It has not done so. Instead, it's gotten really close, and something tells me we might have another candle out to here, and it might reach just barely up underneath it, and from there we'll have to go ahead and act on that key price. Just because it has in fact closed above this what's it called? Fair value gap here. It will have at that point disrespected it completely, at which point it will have become an inverse fair value gap, which is our confirmation. Actually, yeah, it's our confirmation on both the 5-minute and 1-minute. So I'm going to treat it as a confirmation confluence on the hourly. That price is going to continue in the right direction. It's going to, what's it called? Yeah, it's going to continue right back down. It's not going to inverse. It's going to straight down. From there, yeah, it would make the most sense. It would make the most sense for it to come up and sweep that most recent high on our key point right there. Yeah, it would make the most sense. We have 39 minutes before this candle right here closes. Did not realize how much time we had on this candle specifically. We have not reached our time for trade yet. That is completely fine, completely understandable. Just, I understand it. We're going to wait for this to do its thing. We have no S&T divergence on the top side, so as far as I'm concerned, we are 100% going to keep pushing higher to make that new high right there. Yeah, if we fail to meet this, I'm assuming this is going to be our breaker block. And so I will be looking for an order block I am wrong. I'm going to assume this is going to be our order block because this right here is our breaker block. A lack of sell in the market. So we should be seeing an order block here completely filling this. All signs point to price moving higher and taking out this key level. Once it takes out this key level, we are going to continue assuming that our idea is right to trade on a short position because we are in fact in a downtrend at the moment. So without further ado, we will be right back one last time. Fingers crossed our idea is right, honestly. All right, chat. Chat, comment section. Let's see where we're at. We have 31 minutes before this candle closes. It just closed this candle here. As you can see, it wasn't enough to create a new low. However, we're waiting on this one here to do the job. I believe that that's good. Okay, cool. I believe we're set, honestly. I think we're good and set to go. I think we're okay. We're okay, chat. How are you doing, chat? Chat? You're not chat. I'm not streaming. This is comment section. What's up, comment section? How are you doing today? I know it's really early. It's 8:30 a.m. I've never seen the light of day ever. I've never seen the light of day. But that's because we're out here winning. So let's continue doing that. We're winning. Why stop? Right? This right here, I think we are in the right. We are going to continue moving down. Looking at the fact that we've been down for quite a while. Yeah. Interesting stuff. If we were to take, if our idea were to change for whatever reason, regardless of reason, we're going to do this. Boom. Boom. We're going to keep those marked. We'll do the same thing for NASDAQ. Just in the event we see a S&T divergence on the downside, that would signal reason to target these up here. Boom. And boom. Good. We have two zones of take profit. One to the downside, one to the upside. Downside if we're in a short, upside if we're in a long. I do believe we're going to continue short, at which point we are going to put our stop loss above this high. Without a doubt. Comment section, I'm highly doubtful on what we're set up with. I want to take a short, but at the same time, I'm looking at how long we've had. Because look, we've had this right here, right? We've gone all the way up here. And in almost the same amount of time from this candle right here all the way this way, we've gone down, right? So we have an inverse fair value gap here, a large one. It's left a fair value gap for us. A double inverse fair value gap is what I see right there. What does that mean? What does it mean when we see two inverse fair value gaps? It means we have two confirmations. What does this inverse fair value gap confirm? That liquidity was swept up high and that price is going to continue down low. What does this fair value gap confirm? That price was swept right here and price is going to continue higher. So from this downtrend, we're waiting for one large candle up to hit this right here. That is going to leave us a very stark fair value gap. It's going to leave this as an inverted fair value gap. What I think was going to happen is we might sweep down low. If we sweep down low, I think it's okay to enter a buy position so long as we have a break of structure above this key level here, because this is a key level on the Asian session, right? If we have one large candle moving up, this right here, if I'm not mistaken, is going to get cleared first. From this key point right here, I'll be looking and scaling down to the 5-minute and making sure that all our confluences are followed at that point. We're not going to make as much money as if it were just to hit this right here, because if it hits this key point, right, we know it'll only sweep it and move down. But if it closes above this key point here, we're going to change our idea to an up position, and at that point it'll be a buy-in, not a sell-in. So from there, we're keeping our head about us. We're keeping the ideas open. We have a general idea. We see a downtrend. We think it's going to go into downtrend. I think it's going to continue at a downtrend. I want to see. We might actually have a break of structure before we get key level. It wouldn't be a break of structure because that's still lower. Let's see what happens, chat. Boom. We just had a definite key level hit. From there, we scale down to the 5-minute time frame. We wait for a break of structure. Inverse fair value gap or an SMT divergence. We're going to scale down to the 5 minute now. Boom. 5 minute. Boom. From here, we do this right here. Boom. This. We're going to do this. Boom. So we can see good and clearly what's happening and where. What are we waiting for on the 5 minute? We are waiting for a break of structure, which means we're waiting for either a higher low or a higher high, because we are in a downtrend. Lower high, lower low, lower high, lower low. Make sense? Makes sense. Inverse fair value gap. We do have a fair value gap right here. Let me get the rectangle out. Rectangle of wisdom. Go. Boom. Boom. We have a fair value gap. It looks like we're about to have several fair value gaps. We are not in our area of trade yet. Keep that in mind, chat. We are not there yet. We swept liquidity here. We are, if this candle closes, and then this will close in the next minute and a half, 2 minutes, it looks like. When this candle closes, we might have two fair value gaps here. So what we're waiting on is either this fair value gap to get closed above or this fair value gap to get closed above. Once it's closed above, we move on to find our next confluence, which is either, again, a fair value gap or a breaker block, and followed by an order block or an equilibrium. Whatever comes first, we'll see. Then we'll scale down to the 1 minute, wait for the break of structure. Break of structure being a higher high, and that's on the 1 minute. We'll scale down to the 1 minute after identifying either a fair value gap off of the inverse fair value gap. That is in our time right here, right? That is in our time frame. We'll wait for that to occur. Scale down, find a break of structure or an inverse fair value gap, going back down, mind you. At that point, we'll enter in on either the break of structure, which will be high. If it breaks structure to the upside, it'll sweep this key level and push back down. Or if we get an inverse fair value gap, it'll confirm that this sweep is legitimate and price will continue going higher. If we see the inverse fair value gap, I'm tempted to say let's go in on a buy position, a long position. Although at the same time, I want to see that inverse fair value gap sweep this high. It'll close above these two fair value gaps here, sweep this high, and it'll push lower. That'll be our confirmation that we in fact are right. That is if our idea is correct. We have a double. Oh, no, it hasn't closed yet. I spoke too soon. My mistake. We're trading off the S&P. Let's go ahead and make sure that is gold the way we want it. We have a double fair value gap right here. It is much smaller than the NASDAQ's, but that's okay. We have a second fair value gap here. Boom and boom right there. Yeah, that makes sense. We'll go ahead and swap back to this. Double fair value gap on NASDAQ as well. Boom. Boom. Gold. Again, we're waiting for either a break of structure to the upside and then to push back down, or an inverse fair value gap, at which point we'll enter off the top of that. And then we'll go ahead and that'll be our sell position. We can just hike it on back down because it will continue all the way down. Yeah, we are on the 5 minute right now. What exactly are we looking for? We are looking, just to reconfirm, either break of structure, inverse fair value gap, or an SMT divergence. I know what all three of those are. Very easy to spot. Very easy to understand what's going to happen off of them. We might get a triple fair value gap off of this. We have 3 minutes and 36 seconds as of me noticing that. We're going to go ahead and do this right here. Encompass that high, encompass this low. That is a huge difference in price. We did sweep on that candle right there. We swept on this. Price pushed back down. There is a lack of buy orders in the market. signifying that, in fact, we are going to continue in a downtrend. For the best optimal trade possible, we're going to wait for all of our confluences to get hit, take a trade off of that, wait for our take profits to get hit, and after which we'll call it a day. Trade job well done. We are up, by the way, per this right here. I don't think we have an order on. We have a history mode on this. We do. We're just going to do this right quick. So ignore these. I'm looking at this right here. We took a trade on NASDAQ yesterday. We took 2 trades on NASDAQ. It was 20 to 1 odds on all of it. All of it, right? I believe. Not entirely sure. So my understanding is, we went up about $731 because we started with 100,000. We're up $731. Comment section. This is what we're looking at. I don't care what anything else says. We went down at one point. We had 92,000. Not 92. We had like 98, 99,900 something. We were down $200 off of a Bitcoin trade, and that was legitimate. Like, yeah, this right here. We invested $8,000. I believe we lost $120 something, and so it dropped that little bit. But from that previous trade we made on the NASDAQ, both the legitimate trade and the mistake trade, we managed to come back up a whole $800, $900 off of that 1-2 trades right there. I am proud of the first one. I am ashamed of the second one because I should have known better than to go into market without first knowing my stuff. That was my mistake entirely. I'm not going to do that again. I don't know what to do because I have it in front of me. On 2 counts. I have it on 2 counts in front of me. So, we're gold. We have another 19 seconds before this candle closes. Comment section. What do you think is going to happen? I think we're going to get our inverse fair value gap first. Before we get our break of structure, we're definitely going to have an inverse fair value gap. Boom. Triple fair value gap. Really big ones on the 5-minute. Boom. Boom. Looks like we're actually going to wait on this a second. We're going to mark this in on the NASDAQ as well. We're going to mark this here. Boom. This is going to get moved. Don't worry. Bring that back up there because we're waiting on either this to get closed above or this to get closed above. Either this candle is going to get filled completely or we're going to have a couple candles down here. It'll close above fair value gap 1 right here. And from that fair value gap, we'll go ahead and take a short position like we were wanting to before. Take that short and push down. Let's go ahead and look at key levels now that we are within our 5-minute margin. I think we are actually golden to take this key level, this key level. Let's go ahead and mark this key level here just to have a little fun. See what's happening there. Good. Let's go ahead. We can't. Can we look? We can. We can look further back. Let's go ahead and mark this key level over here. I don't think it'll hit that, but we'll see. Let's mark this key level right here. Boom. I don't think it'll hit that. We'll see. Let's go and zoom into our 5-minute here. We are going to take a trade off of the S&P 500 and not the NASDAQ. So we need to do the same thing over here. We have 1, 2. I believe it marked it for us. Either that or we actually did that ourselves earlier. In either case. Cool. Cool, cool, cool. Not gonna lie. We have 11 minutes. 3 minutes, 11 seconds before this candle closes here. We're gonna go ahead and zoom into both of these. Yeet. Gold. We are not within our time to trade. I want to mark that now. I know we are not within our time to trade. We still have 1, 2, 3, 4, 5, 6. We're on the 5 minute. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55 hour and 5 minutes before the time we want to trade. Which means per this move right here, we are in fact going to have a triple fair value gap. Let's go ahead and put that there. It might push higher. If it does, that's okay, so long as the wick, if the wick comes above this, cool. If it closes above this, get triggered, right? Again, we're waiting on the confirmation confluence. We're waiting on a break of structure. We are waiting on an inverse fair value gap. We are waiting on an SMT divergence. And that is going to be seen. Actually, let's go ahead and check for SMT. We have... Oh my gosh. That is almost impossible to tell. I don't think we have an SMT divergence. That is insanely close. Holy crap, that is hard to tell. S&P all the way, we are 100% going to be taking a trade off of because it is lagging that hard. I think we do not have an SMT divergence per this right here. It would have been the first to get hit. We had a wick above on the NASDAQ. We do not have a wick. It was because I didn't mark it like I did on NASDAQ. That was my fault. Boom. Boom. Let's go ahead and do this. Let's go ahead and mark it on NASDAQ. Get it out the way. Come here, you. Stop flipping over the line. You. Close. Ooh, hello. That was a jump. Did we cross? We crossed on that one as well. Okay. Let's see what happens. Comment section. I keep calling you chat. I know. It's going to drive me nuts. I'm used to having someone chatting in my ear all the time. It's silent. It's actually 8 a.m., almost 9. Our trade is between 9:50 and 10:30. We're keeping that in mind. No, I did not forget that time. No, I did not forget that time. 10 seconds before this candle is closed. And we have a confirmed fair value gap. Triple fair value gap, sorry. 2, 1. Boom, that's closed. We're on the next candle. Triple fair value gap. Boom. And boom. We're still waiting on inverse fair value gap, break of structure, S&T divergence. I believe our break of structure is going to be a higher low. We're going to wait for that higher low to form. Once we have a higher low, we're going to wait for the next candle. That'll be our official break of structure on that candle, because we will have made a higher high, right? We'll wait for both confluences to get hit just for rested assurance, making sure things are nice and tidy. We don't want to leave out any liquidity, right? We're going to leave out liquidity just because it's not the risk that we're taking. It's per the strategy we're making, right? Technically, we do have an inverse fair value gap right here. We had scaled down when, what was that, London session, or when market, after pre-market open. If we had scaled down after that, we'd have gone for a fair value gap, and we do have fair value gaps for continuation. That price is going to move down. If we scale down to the 1 minute, we're waiting for a break of structure or an inverse fair value gap to form. Let's see what the 1 minute holds, just cause I'd like to see. We have not broke structure. However, we do have an inverse fair value gap on the 1 minute. Is the same thing true for NASDAQ? We do not have an inverse fair value gap for the NASDAQ. We do have an inverse fair value gap for the NASDAQ. Again, though, we are not concerned about this little move right here because it could dance around here all day. I'd rather wait for the 5 minute inverse fair value gap before taking a trade, so we know price is going to scrape past this, close above, disrespect that fair value gap, and create that inverse we need, and it'll push further down. We will wait patiently for our time to trade. I will not rush this. I have no fear of missing out because I know what I am going to do is make bank off this trade, and we are going to have a day. Again, that is next to impossible to tell right there for that if that's whether or not that's an SMT divergent or not. That's like extremely hard to tell. Looks like we're getting a bit of SMT divergence now, though. That price just went below that low. Not below the low, but you see what I'm talking about. This is going down. We have SMT divergence happening right now, right here. On this, down to this. On the 5 minute, we also have SMT divergence from here to here. And again, that could change. We have 45 seconds for this to correct. If it doesn't, and we in fact have a defined starting to look a little the same there. There it goes. That is funny looking, isn't it? Let's see what the SMT looks. We might be having some SMT divergences happening. You guys see that, chat? You see the SMT divergence on the 5 minute? Look at that mess. That is our 5 minute confirmation right there of that reversal, and that price is going to keep moving back down. Wow. Wow. We did close on that. We closed on that. Confirmed SMT divergence on the 5 minute. What are we waiting for now? We're waiting for either a breaker block, order block, fair value gap, or equilibrium. Boom. Our most recent high to our most recent low, just so we're on the same page. Boom. Where's the GAN box? This GAN box. Most recent high. Boom. Most recent low. Boom. There's our equilibrium, just so we're on the same page. We're using our tools effectively, regardless of what the outcome is. We're going to keep this on here for the sake of knowing. We're going to do the same thing over here. We're going to shrink this down just a bit. I'm going to do this right here. GAN box. We're going to take this high here, drag it down to this low here. Boom. We are not within our time to trade. I am going to wait. We do have SMT divergence. We have multiple SMT divergences happening. That is on the 5 minute. That is our confirmation on liquidity sweep. From this, I do believe we are going to be looking for our 5-minute continuation confluence. That is on fair value gap. That is on breaker block. That is on order block. That is on equilibrium. In the event we cannot identify breaker block or order block, keep it simple. That's gold. Good. We will wait patiently. We will wait. We have a little bit to wait. We'll be right back when we get a little bit closer to here. We'll see what's going on. We'll see what's happening. We'll see what's, hey, what's up, hello type of deal, right? We're going to keep this high marked just in case. I don't care what's happening over here. We'll wait for a low. That's fine. I'll patiently wait. Hope you guys are looking forward to stream. We got a stream coming up tonight. Be prepared. Yeah. I got a video to explode on my gaming channel, and I'm actually very, very happy about it. I miss my negative channel. If you guys don't know what I'm talking about, head to the description down below, right? You can see those links just like anybody else can. You can click on the one that says the range orb. From there, you'll see that channel in all its glory, as well as my pretty face. I believe the first thing that pops up is a short I made on my disappointment as to what happened the previous video, like where it was nighttime, very dark. All you got to see was the shadow of a tripod, right? And then just complete black because of how dark it was. It was terrible. Starting to get some interaction off of the Orb Plus channel. I appreciate you guys for tuning in. If you guys like the videos I'm making, if you like my progress in the way I'm doing things, be sure to give all those videos you saw a thumbs up. Tells me you enjoy the content and that I really ought to make more. Subscribe, consider subscribing, because I don't intend on stopping these recordings anytime soon. I do intend on continuously posting these recordings for as long as I can. In the event, say, whatever, we stop out and we just lose a lot of money, I'll just go and get a job, make that up, come back, start making videos again. It might be like a short span of time that I stop doing videos on this channel, but it's not going to be a very long time. I can pretty much guarantee you that. Yet for internet's sake, that doesn't mean much in the context of I need to get a job and months of work. I understand that part. We have 3 months. I'm chilling on my butt until we have 3 months of profitability. I'm sticking to every word he said in that boot camp. The very first one he put up like 2-3 years ago. Yeah, I'm sticking to every word he said in there. 3 months of profitability. I am green on the charts on paper trading, and only after those 3 months of green am I going to stay on the chart with my real money. Not taking any shortcuts. Not even going to try it. What the heck? That's actually funny. I wish I could show you all this because it's amazing. That is awesome. Wow. That's also pretty funny. Chat or comment section. We've got a whole 40 minutes. I don't know what you're waiting around for. Just skip to the skip to the best part of the video. Go ahead. I'll wait. Don't worry. We still haven't hit our time to trade yet, but I wanted to take note of something. Had we have done exactly as I said right here, this is the S&T divergence. Had we have done this, we have been wrong because price is still tanking hard, tanking. We do have an S&T divergence right there though. Just wanted to point that out. We'll go ahead and get rid of the equilibrium because it is not useful to us at the moment. We are still on the 5 minute. We still have 5, 10, 15, 20, 25, 30, 35, 45 minutes before our time to trade arrives. We are still looking for a break of structure that is a higher high past this green candle here, or a higher low. It's going to be a higher low before it's a higher high. It's just how that works. Either that or a large green candle up, sweeping this entire gist. Once we get that confirmation, it'll probably also be a break of structure considering how high price wants to take a hike. At that point, we can go ahead, enter our sell trade, watch price plummet again. It'll probably take 1, 2, 3, probably all 3 of these right here. I did not realize we'd actually hit 1, 2, 3, 4 of our key points. And these were recent. We only got 4 left down low. So, we're waiting patiently. If I had to guess, per a lot of the trade recaps I've been seeing across TJR Trades channel, our best hope of making an actual profit off this is if price comes back up, sweeps our key level a second time, right? That's this key level right here. It'll sweep this a second time, close above this. From there, we'll enter a sell position, a short position, and then from that, it'll come back down and it'll actually plummet. We'll see it completely plummet. So far, market is sticking to the structure. We are not breaking structure at all. This is, in fact, 100% a downtrend, and we are going to be taking a short position. Let's go ahead and skip to the good part, shall we? So on that previous pause, seeing as we are now back in the game, we are looking. We have a break of structure on this candle here. We made a new high. Woo! Well, actually, we broke structure on this candle. With this break of structure, we also got a fair value gap on the 5 minute, right? We got it on the same gist. We have a break of structure and inverse fair value gap on the 5 minute. We are now waiting for, guess what? A fair value gap on the 5 minute. Either that or a breaker block, an order block, or an equilibrium, whatever comes first. I think what is about to happen is exactly what's happening right now. I think price is going to shoot way back up here. It's going to touch our key level right here, and it's going to plummet back down. Now, we have not done anything aside from wait patiently for this time to come and hit. We have one right now being respected fair value gap. I feel like price is going to continue rising as time goes on, as we get closer to this 950 mark. When it does, we will have, fingers crossed, the idea is correct, 1-2 inverse fair value gaps. I don't expect it to clear this one just because it is so small, but at the same time, if it counts and it is a fair value gap, I'm looking at it, it looks to me like a fair value gap, we should be in the clear to take a sell position off this and watch price plummet right back down. We again are waiting for that inverse fair value gap just right here. Let's go ahead and check for an SMT divergence while we're at it. I'm not seeing an SMT divergence anywhere in it. We did get a break of structure on the 5-minute though. It did. This green candle closed above and we did make a new high. We have 1 minute 54 seconds for this candle to close, and we are still on the same boat. We are not going to take a trade until after 950. We are not, we will not, we shall not. We are waiting patiently. If I had to guess, I'm going to say we had a breaker block moment here. This green candle was our breaker block. This red candle was an order block. As a result, price is going to push way higher as a result of lack of sell orders in the market. I have to remind myself, we got to stay on the S&P 500 because it is the way that it is. We don't want to miss out on that trade. Just a matter of waiting. We have 1 second. It closed. Respecting this fair value gap, I think price is going to continue pushing down. Again, we're waiting patiently for the break of structure. Technically, we did get it onto this right here. We'll see a confirmed break of structure as soon as this candle closes. It should make a higher low, at which point we are in line for our break of structure. On that same note, we're looking after that break of structure to a fair value gap, breaker block, order block, equilibrium. For continuation, that price is going to continue moving down. We're just waiting patiently for that. Once that's done and out the way, we'll wait for the 1 minute confirmation as soon as we see that fair value gap or the breaker block or the order block. And from that point on, we will continue to enter off of either that break of structure or the inverse fair value gap it makes. And again, we're not going to trade until it is 950. Once we hit that 950 mark, that is where we are going to enter. We're going to look for an entry at 950. For my alarms, we just hit a 9:50 a.m. point. That is in real life time. Chart is 10 minutes behind. We can see that quite clearly. 2 candles away from being in the clear when looking for a trade. Again, we're looking for either a break of structure or inverse for value gap. We have the break of structure on the 5-minute. If this candle closes in the next 4 minutes, we've got for it above, which it's starting to look like it will. We might very well have ourselves the inverse for value gap that we're wanting. At that point, we'll be after one of these two to get closed above. We'll wait for one of these two confluences to get hit up here. Once it does, we'll go ahead and press sell, get into our short position, and from there, we'll watch price tank all the way. At the same time, it's starting to look like we might not have that inverse for value gap, but that's okay. Technically, right now, I don't think we are allowed to care about this one specifically because it was sweat. We have no orders to be filled off of this. This has been rebalanced out per the market and it was respected. It has not been closed above. If this continues higher, which is, again, looking like it's going to, we are going to be waiting for one of these two to get hit. And per the, let's go to the 30-minute and just check. We do have a very large fair value gap right here to fill. On the 5-minute, we have 1, 2, triple fair value gap, right? We have a break of structure on the 30-minute, but we're not concerned about the 30-minute. We're concerned about the 5-minute. We want our inverse fair value gap. We've already got our break of structure. As soon as we have the inverse fair value gap at the top, we're going to sell on the next candle open. Get it nice and through our heads. We are not selling until after we have a confirmed inverse fair value gap. Specifically speaking on the 1-minute, because we've already hit one. We've cleared this, so we will have an inverse fair value gap on this. Boom, on the 5-minute. We are waiting also very patiently. Comment section. I keep calling you chat. Videos are already kind of long, kind of short, kind of something or another, right? Let's go ahead and get this out the way so I can actually see how long we have. We have 1 minute and 27. Comment section. We have 1 minute and 27. Let's see where it takes us. Let's go ahead and get out our GAN box just so we're on the same page. We have the most recent high here, down the most recent low here. We're going to keep that open because we do have a low here and we do have a confirmed break of structure. We are going to keep going higher per this break of structure here. Price did, well, say it did. I was going to say it did sweep. Seems we did close above that smaller fair value gap we marked out from before. Starting to begin to piece together where we find our break of structure after 950. In the event we don't receive a inverse fair value gap per our 5-minute time frame confluence, we'll be looking for a break of structure to the downside on the 1 minute off of a order block from the 5 minute. Let's go ahead and check for S&T divergences because we are 4 candles in now. 1 too high, 1 too low, 1 too high, and then 1 too low. No S&T divergence for my eye specifically. One, two, three, four, five, six. 1, 2, 3, 4, 5. We do have an S&T divergence right there on the high right there. That's going down. That's going down. Okay, I'm wrong. Never mind. There is no S&T divergence right there. My mistake. It's good to double check that. Make sure we're on the same page. Past 6 candles, no S&T divergence on the high or low from what it seems. Let's go ahead. Yeah. No S&T divergences as of yet. We are waiting. Actually, on this candle right here, we have an S&T divergence. The S&P, again, is lagging behind. So the price is going to move higher up here, which makes sense. That is in our confluence. We will have an inverse for value gap in the event that the price on the NASDAQ continues to go higher. We'll wait for an inverse for value gap on the NASDAQ. That'll telegraph to us what we need to look for on the S&P. This allows us to go ahead and get ahead of the game when it comes to the S&P 500. We have 2 minutes, 20 seconds for this candle close. We have 1 inverse fair value gap on the 5-minute right now. I'd really like to see this fair value gap right here get inverted. I know it might not. I know that's a slim picking chance right there. It really might not. Because technically there is no imbalance. There is an imbalance like right in here. So if it does close above this, we are definitely going to be pushing way back down. We are approaching it. We are in fact approaching. We have 1 minute and 22 seconds, comment section. Minute 22. We are approaching that quite fast. Quite fast indeed. If the NASDAQ closes above it, we have our inverse for value gap, as well as a break of structure on this high here. "38 seconds. We're approaching 10 a.m. real time. We're a minute away from 10 a.m. real time, I should say. "5 seconds. We are now within our time frame to look for trades. We are still well within reason to continue pushing higher. Again, we're looking for a short. And our stop loss, just so we're on the same page, is going to be placed just above this high right here, this key level. What do I think right now? I think we are going to hit that inverse fair value gap. It's just not going to be until about, I want to say, 10 minutes in. 10, maybe 15 minutes in. We'll have the first inverse fair value gap closed, like I was saying before, because technically these two were just clearing the way. This right here is the true imbalance of it all, because later on, like back towards that way, we have this level completely filled. It's just this right here. I think under that confluence, I'm going to go ahead and delete these. If we see price go higher, that's completely fine, but I do want to see this fair value gap without question completely inverted. We'll do the same for the S&P because we know what's going to happen based off of what NASDAQ is doing. We're looking for one inverse fair value gap. Let's go and bring this back up after our inverse fair value gap, which is definitely going to happen. We're waiting for it to hit equilibrium. We have our equilibrium here. If we want to get real technical with it, we may have already gotten our inverse fair value gap. We're looking for this fair value gap to get respected. If this is the genuine confluence that I'm under the impression of that it might occur, we're looking for the next candle open to be a down candle, at which point we'll be looking for that right there. A break of structure back down to the downside. That break of structure is going to come in the form of a lower low. From that break of structure, look for a fair value gap. Minute 24 to close on candle. .30 seconds till candle close. Again, we're looking for that placement of entry. Candle closure to the upside. Huge amount of price action. I know it's very hard to see because of that lovely white thing here. We're going to go ahead and change this to a very dark gray so we can see what price was doing. You can see that white line right there. I know it's very hard to see on recording, but Hope it picks it up. We had price move all the way up to here. It respected. I don't think it went into the fair value gap. We had price move all the way down here. I don't see anything it could have swept. We didn't sweep any kind of liquidity. So we are continuing to look for the same two confluences, either a break of structure or an inverse fair value gap. I believe we did have an SMT divergence, potentially. Because that wick went way above that. It filled the fair value gap. It respected the fair value gap. Did we get an SMT divergence? I think we did. Right here, from this candle to this candle, it went up. From this candle to this candle, it went down. I think the NASDAQ is lagging behind the S&P. We have an SMT divergence there. From that SMT, we move to continuation, confluence, fair value gap, breaker block, order block, equilibrium. Do we see a fair value gap here? We do have a small one on the NASDAQ. We don't have one on this. Fair value gap continuation is confirmed. We're going to have price move back down. From that, we need to scale into the 1 minute on the NASDAQ. Boom. We are looking primarily at the moment for a break of structure to the downside. We were saying before that the S&P 500 was lagging behind the NASDAQ. We made a lower low here. This is our break of structure. On this break of structure, we're going to wait for price to come back up into this fair value gap, confirm liquidity sweep on that reversal, and we'll take a sell off of the break of structure. I'm glad I spotted that SMT when I did. That would have sucked had we missed it. We have a minute for this to close on this candle. Candle just opened there. If we can get an inverse fair value gap off of the next 5 minutes, the next 5-minute candle, price needs to go above this. That's all we're waiting on. If it clears this, we're taking the sell short position off that next candle. Waiting patiently. We are 100% going to be taking this off of the S&P 500, not the NASDAQ. It is lagging behind. It is showing major signs of SMT divergence. NASDAQ wants to go lower. S&P wants to go higher. So we'll use that to our advantage. Wait for S&P to go above. From there, we did sweep liquidity on this candle here. We're going to wait patiently. Price wants to hit that imbalance so badly. You can kind of see it. All right, we have a break of structure on the one. We're going to go ahead and sell here. We want 1 unit. Yes. Boom. There you go. Let's go ahead and try and modify this. We're going to take our Gan box, this right here. We're going to put our stop loss on this right here. We're going to do, that's not the Gan box. Take profit, where is this? Taking a short here. We're going from this high right here, just above this. Boom. We're looking for all this here. I'm looking to take 4 take profits. I think that looks about right. This is a 1 to 1.29 trade, 2.29 trade. Now we wait for those profits, take profits to hit. If our idea is right, yay. If not, we will get stopped out for this key level here. And now we wait. We did press sell. We are on a sell position. Your stop loss, put it there. Modify, gold. We're going to take our take profit, bring it all the way down to here. Modify, gold. We now have our stop loss set. We have our take profits set. Now we wait patiently. Let's go ahead and get rid of this fair value gap note here. Boom. Let's go ahead and get this brought back down to here. We are on a short position. Comment section. We got our break of structure before we got the inverse for value gap on this right here, but that's okay. Now we wait. Oh, so very slowly. Let's go ahead and scale up to the 5 minutes, see how we did. The entire time I'm watching this chart right now, I keep psyching myself out. I'm psyching myself up. I'm working my way towards the confidence of being able to say, cool, this is a trade worth taking. I think I used all the confluences correctly as early as I was on some of the confluences during pre-market and into London session. I was using all the confluences on every time frame I could find to map out where price was going to go, when it was going to go there, how it was going to go there, the reasons why it was going to go there. I am confident in this short position because we are still in a downtrend according to the 5 minute, according to the 1 hour, according to the 30 minute. Higher time frames hold higher power. On the small time frame, it's okay to watch it deviate a little bit. I'm not too concerned with right now the way price is headed. I understand it's not moving as fast as I'd like, but that's the part of the game. That's the name of the game. Patience is a virtue. Be patient with the progress you've made, and eventually it will be rewarding to you. So that is what I'm going to do. I'm going to take that advice all the way to the bank. I am going to be patient. We waited for our time to enter the market quite well. We did get a break of structure on the 1 minute, and as a result, we are watching this trade unfold. I'm not going to pause like you're going to sit through this silence with me. My ears are ringing from the deafening sound of silence. My own voice is enough to make my head not split, but my voice is making me nervous. Me talking is making me nervous. I am nervous. And rightfully so. This is some money, and I'm looking at a negative number that's going down slowly. And I really, really hope my idea is right. That this is a downtrend and we're going to continue down in price. Really hope that's the case. And I now know how to exit partially on the market. When we hit one take profit, we're going to remove 1 unit. And from there, we're going to keep going. Plain and simple. Let me see, because we are on the 5 minute now. I marked 1, 2, 3, 4 draws on liquidity right here. That could be headed to. I think our best bet is this right here. This draw on liquidity specifically. It's probably going to hit this. It probably will not hit this. Why? Because it's been covered on both sides. I strongly think this will be our stop liquidity right there. Even though I have it marked all the way down there. We'll see what happens as time continues on. Let's go ahead and zoom way back in here because it looks like price is about to hit our first take profit. Potentially. There we go. First area. Again. We got 40 seconds for this candle to close. Just so we're on the same page, my first trade was March 20th, 2025. I have 3 months of profitability to get through. I need to stay green for 3 months before I legitimately go into this market with my own money and attempt to make a trade on this market. I need to not psych myself up. I need to psych myself out. I need to get rid of my mental because, oh my gosh, am I also very stressful at the moment. So, to exit partially from the market, I press X on this, partial close. I'd like to sell one unit. price would need to go lower, I believe. I don't want to close position. Let's see if we hit our second take profit chat. We got a little bit to learn. Just a little bit. And that's okay. I'm going to crack a window right quick, chat. Allow me to mute up. My oh my, did it just get oh so very bright in here, chat? See what price is doing on the higher time frame, just so we're on the same page. Let's go to 30-minute. Price is moving down as expected. Boom. Let's go ahead and bring this back down to the 5, just so we're not getting our hopes too high. So we have this set up on the 5-minute. We have our stop loss set just above the fair value gap. That was in fact respected on the 5-minute. Did not realize how bright some of these trees we got are in the bright sunlight. I've looked at trees, I've looked at grass, I've touched both quite often. How do trees do it, man? How don't they get sunburnt? Bark. Gotta be bark. Nature's homemade sunscreen. Bark. Just gotta be. I'm gonna mute this volume right quick. I'll keep eyeballing the chart. Up, down, up, down, up, down type deal. Crazy chickens. I keep falling back onto what I said before, like towards the beginning of this video, that I think because of the span of time we've been in a downtrend, right? I should have been looking for a long position because, again, typically at the ends of that, we see a liquidity sweep and then a sharp up, right, in the market. I'm not seeing a liquidity sweep on the bottom of this move, which tells me one, it's not going to be reversed. At most, we're looking at what is right now a small retrace just to recuperate from the fair value gap left up above that was, in fact, respected. The fair value gap is confirmation of the reversal from that down, right? That we're going to continue price down. We did get a break of structure on the 1 minute as well as a fair value gap at the same time, which in turn led us to enter. And from that, we did hit one take profit. We're just waiting for that rebound to happen, and look at that. We just broke structure, made a lower low, right, lower high, right there specifically. So price is in fact going to be tanking. Part of me wants to move my stop loss, but at the same time, I know that's probably the smartest location to put right there. That way I know the trade idea is wrong, right? There is no fair value gap at the moment, though at the same time, I'm looking at price move higher in hopes that it sweeps the liquidity off of these highs right here specifically, right? This would validate the trade. From that reversal, we'll have a huge drop in price. Looks like we just barely tapped into that fair value gap a second time. We have 30 seconds for this candle to close. Either this candle is going to sweep past that fair value gap, making it an inverted fair value gap. Inverse fair value gaps, you get the point. From that point on, again, huge drop in price, continuation sign on the 5-minute. I think we swept that liquidity off to the left-hand side right there, right here specifically. If so, barely. Looks like we're going to continue higher just a little bit longer. This is where the psychology comes in because this could be my actual money right now. I could actually have just lost $875. The same mistake, the proud trade I made that $500. The mistake trade I made another $300. I might just lose it all in this one trade if I'm not patient enough. I'm going to wait patiently. I will let the market have its way. Again, patiently. Under the notion my idea is right. I will be patient. I have set my stop loss, so if it hits it for gold, We did, in fact, sweep that liquidity. We even went into our fair value gap and into equilibrium, as we can see here. I think a general rule of thumb, a note to the side, if I will, for future reference, when I see a fair value gap on the 5-minute and I want to place my stop loss off of the break of structure or an inverse fair value gap on the 1-minute, I need to make sure to put the stop loss above the second candle of the fair value gap I'm looking to make an inverse fair value gap, right? So for reference sake, right here is our fair value gap. This stop loss is just above it, right? I'm wanting to place this stop loss just above this candle right here. So directly above it. So that way we have a little more wiggle room when it comes to this. The risk to reward is going to suffer. I'm okay with that. So long as it gives me a little more wiggle room, because in fact we did sweep liquidity here. Now what I'm looking for is the price to return back down into the continuation downtrend. We did not get an inverse fair value gap right here on the 5-minute. However, let's go ahead and scale down to the 1-minute right quick just to see if it was in fact a inverse fair value gap. Let's go ahead and do this right here. We did get an inverse fair value gap right here. That is our continuation sign, which means price should fall. Let's go ahead and scale back up to the 5-minute just to get a larger view of what's happening here. When we get past this take profit a second time and down into this second take profit right here, I'm tempted to say we'll go ahead and partially close. We're not going to wait a second time. We're just going to let it fall through, wait for a closure, not a closure, but we're going to let it fall through here. Partial close on that to the best of our ability. And from there, we'll go ahead and take profit on 1 and 2. Again, we're waiting on market to do what it will. Keep forgetting I have Instagram now. Like, where is it? I don't see it nowhere. Interesting. I guess I'm gonna have to give that a try. I can't go into detail here, but I'm sure it'll pop up in a video elsewhere. Shoot, I found it in a forum, and I was not expecting it to be. Oof. Crazy. Am I getting nervous? No. Old habits die hard, though. Old habits die hard. I'll get into it after we exit this trade. If you guys are interested in seeing me learn how to play D&D next, after I've mastered this skill, um, comment that down below, because I'm tempted to actually get into making a story and then having players around to actually play the story, you know? I think it'd be an interesting endeavor, and honestly, I wouldn't mind learning a new game, to be completely honest. I know what I'm doing when I hop on later tonight. I will be doing one mission on Warframe, and then if you guys are interested in watching the stream, head over to Orb's Vault. That link cannot be found in the description. You have to search that up in the YouTube search bar, or you can go to Twitch. That link can be found in the description. When you see that link, press it. It'll take you directly to my channel page on Twitch. If I'm streaming, you'll see, hey, stream is starting. Stay tuned. Or I'll be in the middle of the game, literally just streaming. I'm thinking we'll start with Warframe, and then we'll go from Warframe to Halo. I believe I specified Halo Infinite, if I'm not mistaken. I could be wrong about that. I'm pretty sure I specified Halo Infinite. In the event I haven't specified yet, I want to play Halo Infinite for Friday's gaming stream. It'll last from 9 p.m. Let me check my alarm for that, actually. So make sure it makes sense, and you guys know. 9 p.m. We will be streaming from 9 p.m. to 1 a.m. Halo Infinite. stay tuned for that in the event you guys are interested in watching that kind of content. You can find it on Orbs Vault for YouTube. That's ORBS space Vault, VAULT, exclamation point in the search bar. Find the red icon that looks similar to the one you're watching on this channel now, and you'll know exactly what icon to press on, right? Hi, that's me gaming and streaming at the same time. We have a lot more videos over there on that channel, as well as a ton more videos on the gaming orb. That link can be found in the description of this video, as well as the description of the channel. Be sure to check both of those out. In the event you guys like this kind of content, be sure to give it a thumbs up. I understand I am learning. I understand that some of the stuff from past videos is a little confusing when not put in the context of I am learning and I'm not giving advice. I'm pretty sure I state that in almost every single one of those videos, so you are not to be confused. Okay? Okay. Comment down below if you guys are interested in seeing me learn how to set up D&D. I want to be the GM of a D&D session. And I understand a lot of vets in D&D are hardcore. You have to be a player for a certain number of years to understand how the game mechanics work, how in-depth stories need to be, how in-depth certain aspects need to be. And I get this is not the kind of content to be talking about on this video specifically, but I feel as though talking about this and what I want to do with that is giving me the confidence I need to be patient. And to be completely honest, I prefer to be talking about that kind of thing. I want to make that story. I want to make it happen. I do. In between making trading content as well as gaming content, I want it to happen. I'll tell you what. If we hit the goal of 1,000 subscribers on the Gaming Orb, not this channel, not Orbs Vault, but the Gaming Orb, we're at 379 subscribers. Hang on, I'll even show you. Hang on a second. Boom, 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 boom. Right here. Wrong account. This one. I don't see anything stupid on that. Right there. I don't know if that's in focus or not. You can see that, kind of. I hope it's focusing on the phone and not me. If you see that, yay. We're at 379 subscribers. Get over there, subscribe. If we hit 1,000 subscribers, I am going to start streaming on Wednesdays my setup for D&D. I'm going to set up an entire story before we even get players. I'm going to make an entire story based around D&D. I've got books galore. I've got plenty of inspiration. I've got everything you could possibly want or need for D&D. Comment below. Go subscribe to The Gaming Orb. No spaces. You don't even have to make caps in it. No special characters. No capitalizations. The Gaming Orb. Find the red icon. It's an eyeball on fire with a triangle below it with some neat looking pattern on it. Go subscribe to that. Go watch some videos. I'm not going to lie, they're kind of mid videos. For the most part, most of those videos were recorded on OBS back when I didn't have it set up. I legit was a novice, and I'm still a novice. I'm still learning how to edit videos at the moment. And you can tell from the videos I post today, Monday, Tuesday, Wednesday, I'm not making any special effects to them. I'm legit adding transitions that have been pre-built in DaVinci Resolve, and I'm legit cutting out pieces I don't want in it. I'm cutting out the silent bits. I'm cutting out the nonsense bits. I'm just leaving the good stuff that I think is good in the video. That's what I'm doing. Again, if you guys are interested in that kind of content, links to all of that can be found in the description down below. To the Twitch, from the Twitch to Orbs Vault, and regardless of where you are, to the Gaming Orb. Go subscribe. Support me so I can get to making better content. That's all I'm going to say on that note. We're still waiting on our trade to be valid. We are waiting a long time, and I am all for the waiting game. Let's go ahead and expand this so we're nice and encompassed, right? We just barely hit equilibrium. We're like right in equilibrium. I'm tempted to say we might need to wait for it to cross equilibrium before we truly see that leg down we're looking for our take profit's sake. We got 43 seconds on this last candle right quick. Let's see what happens there. I'm going to go ahead and actually start doom scrolling on TikTok to keep myself awake. I have not slept, by the way. I've flipped my entire sleeping schedule around to where I'm available for trading, making this video here and now, and live streaming later on in the night. That's how I'm working that right now. We are now 10:56. I believe I've broken a rule of mine. That's me, I myself. 10:30 a.m. Not take a trade. I'm going to wait patiently. Because if I think my idea is right. I think we're going to tank in price again. I think we're going to continue the downtrend per the higher time frames. I'm going to wait patiently. That's me. We swept two highs. I don't know if you saw that or not. We did sweep two highs. Boom here. Sweep of this high here as well as this high here. We approached equilibrium, but we didn't touch it. And that could be like close enough to rebound off of it, to give us that leg down. What do we confirm from a liquidity sweep? That sign of reversal, right? Because this is a liquidity sweep. We did sweep liquidity off of two highs here. This is the sign of reversal we need for it to continue and price back down, right? What are we looking to confirm liquidity sweeps? We're looking for break of structure, inverse fair value gap, and SMT divergences. We're going to look for, first off, break of structures. Do we have a break of structure? We will know here soon. Why? Because right now we are waiting for a closure below this high. If we get a green candle that closes below this high and then a red candle immediately afterwards, that is our break of structure. Plain and simple. In the event we manage to get a inverse fair value gap, which that is what this confluence is up here, right? We barely come up above this inverse fair value gap, and it should close like right in there, right, for it to be disrespected. It'll come back down. I want to move this stop loss. We did not get stopped out. We're on the S&P. S&P. Did we? What happened? Chat, did we do something? We took profit, but that wasn't where I set my take profit. I took profit way down here. Huh? Color me confused. Just a little bit. I didn't cancel the trade. And it looks like were we stopped out? Put my stop loss way up there. Huh? Did I make a boo-boo, chat? Huh? Color me confused. Genuinely. I didn't close the trade. I didn't cancel the trade. Why was it canceled? The trade is still valid. We did not lose on that. What in the world? What is going on here? We should not have lost that trade. At least not yet. The idea was not invalidated. The idea was put up here. We did not reach that. What in the world? Wish there was a plugin where I could like go back in the video and see exactly what was happening and where. Because I've been looking up and down at this for a minute now, and color me confused. We entered on the 1 minute, so maybe it should show us here. Nope, don't do that. realistically speaking, I don't believe we canceled. I strongly don't believe we canceled that order. Maybe it was the hopping around from 1 minute up to 5 minute and just sitting on the 5 minute. I'm not entirely sure. But it's a bit on the perturbing side when that becomes a thing. And yeah, that's quite perturbing indeed. How about this? We'll go to the fair value gap because that I don't think was a valid trade. Like we're gonna take this trade. We're gonna do this again. This is paper trading. This is not something I should do in the actual market. Never, ever, 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 ever do this. I'm doing this for science, for curiosity's sake. I want to see what happens because the idea I think was right. This isn't revenge trading because I'm guessing we were stopped out. I don't know where, but I assume we were, right? We traded off of a break of structure to the downside over here in this mode right here, right? That's a large candle up right there, and look at that. If this candle closes above, that's our inverse for value gap. Again, this is purely for science. I will never do this in the actual market. Ever. Under any circumstance. If I get stopped out, I get stopped out. I will never do this. The way it would have worked is we would have waited. Because we got really close to our equilibrium here. And we entered off of the breakup structure there. Lower low, lower high. Why did it cancel? I didn't cancel. Was it because price came back up past where we entered at? That would not have made sense because we had a stop up here. And I get this right here, this little box right here is just a drawing, but still it was valid. It hadn't been crossed up until right now. We would have been stopped out by this. Had it been closed above, it had been invalidated, and yes, we would have lost this trade. With that being said, that's completely fine, completely understandable. What in the world happened? What did I not see? About this, the trade's over. We're gonna take our beam, put it here, boom, yay, just to show where we entered, boom. Boom. So we got stopped out way up here. It crossed our fair value gap over here. This is our inverted fair value gap off of the 1 minute. Our trade idea was invalidated. Price is going to continue moving higher, it seems. Okay. No problem there. But I am curious to know what happened. Because we swept liquidity right there. That's what happened. We had an opportunity to take this profit down here because we did cross into it twice. We had two opportunities. At the time, I'm guessing just one because we entered off of this candle here. This would have been our take profit. Yeah, sell at this. We would have sold here. Actually, we would have bought back in right here because we sold at this, right? Holy crap. That was loud. But we had an opportunity. We did not take it. We thought our trade idea was valid and would have continued lower. I now know not to set my expectations too high. I now know to set my take profits a little more considerably. I also now know to watch market. FOMC. That is a folder in the notes not to trade. Why? Because of whatever FOMC says. It's in the notes. Do not trade while FOMC is on. That was my blunder. FOMC. That and not seeing the liquidity sweep that was in front of me and not taking the one take profit we got for the day. We could have exited so much earlier. We didn't, and as a result, we got stopped out. We cleared all of the liquidity from here, the imbalance. I imagine price is going to continue lower because we are still within structure. This is a new high, but it is also a lower high than this right here, and I believe we can actually see this more accurately on the hourly. Boom. Boom there. Yep. Lower high. Price is probably going to tank after this. I'm not entirely sure what happened, and we will review this same video Monday. Like, I will watch this video I post online Monday. I'm not even going to edit it down or anything. I'm just going to post it. This will be the one video I do not edit down into a smaller video. Unless there's like a lot of quiet stuff. And again, I understand that's a thing. We were watching price the whole time. And as a result, I will edit it down. Huh. That has honestly got me stumped. I don't know, aside from that liquidity sweep for the reversal back up to the upside. Assuming this right here does not make a new high and we break structure on the hourly, the idea was correct. We did not wait for our fair value gap to be closed above, disrespected, and as a result, that was on me. Yeah, it's on me. There's no joking, laughing matter about that. Like, that's on me. That was a lot of money to lose right there. I know what I did wrong. I know what to do now. That was the trade for the day. We did, in fact, get stopped out. I hope you guys enjoyed this video. I understand it sucks to lose. However, I know how to learn from my mistakes. I will not be making that mistake a second time. Yeah. Big sad. There we are with the actual order history now. I believe this is on the NASDAQ. 3 canceled orders. The S&P 500. It was a take profit cancel. That's what this was. we missed our take profit. That's what I'm picking up from this. We have no positions that are currently open. That's because we were stopped out. Understood. Not a problem. Yeah. I'll see you guys in the next video. Peace out.